Hannah Kesler, it's great to have you on.
Well, thank you, Jack. Thanks for having me today.
Yeah, I've been hearing some of your podcasts and interviews on YouTube. And so I guess the last I heard you were fixing up a van, I think or you were going to Nashville to pick up a van. Well, what's that about? And are you funding that with your whole life policy?
Yeah, no, I can get into that. That's one of my favorite things ever. Actually, so that is one thing I accomplished in 2021. I wrote at the top of my goals for the year that, hey, this year I'm going to go out and purchase myself a van. And really what got me into the idea of it is when I'm not teaching folks about this, I like to travel around the country, go listen to live music, go see my friends in different states and just kind of travel. I mean, I'm young, I got no children, no ties really tying me down. So what I did is I went out and I went to the dealership itself, the Dodge dealership, and I bought a Ram ProMaster. Okay. And so that I funded from my infinite banking policies, the whole life policies, right? And these whole life policies, they have equity, they have cash value in there that I can take out a loan to go buy whatever I want to buy. And so instead of going down to the bank, I said, hey, I got enough cash in here. I'm just going to pay cash to the dealership. And then me being my own banker, I'll play that honest banker with myself and pay myself back as if I were to borrow from any conventional bank. And that one's important. We all hear the talk about pay yourself back, but we never do it. But you should do it. You're violating a big principle called economic value added. But anyway, so that's what I did, and I fixed it up, and then now I'm here traveling around.
Awesome. That is such a cool story. Well, just taking a step back, how do you describe infinite banking to other people? Because when I try to describe it, a lot of people say, no, you can't do that, or that there's a lot of pushback. Like, how do you describe it to someone?
Yes. So how I get into the conversation of describing it to somebody, I mean, so I already threw out the word out there, whole life, right? I don't bring up that word whatsoever because at the end of the day, I don't care that it's a whole life policy. The only reason that we're over here utilizing a whole life policy is because we're able to do all of the things we're allowed to do with these features, benefits, the control, the tax-free status, so on and so forth. I could keep going on. And to be honest with you, why I avoid bringing up that word is because the masses, my family included, before we got into this world, they're following the big financial gurus out there. And what have we been taught, right? Whole life is a terrible, terrible thing. Do not put your money in whole life. It's a terrible investment, right? Buy term and invest the difference. And so it's just that mindset. So you got to walk them through that. Hey, the only reason I'm utilizing this is because this is what I'm able to do over here. If I could do the same thing with water bottles, I'd be hooting and hollering to you about how cool water bottles are, keeping control and managing my wealth, right? It's just this is the vehicle I'm able to do it with. So I kind of take that step back to going through the process of the banking that we're already accustomed to, right? Because we've just been programmed from day one to be consumers of the bank. If you bring money in, I don't care how you bring money in, where do you go put that money? Down at the conventional bank. And why? Because that's just what I've been taught. That's where they hold the money, right? So you got to kind of bring them back to their whole why around it.
How do you respond to the Die Hard Ramsay and like Susie Orman fans that do say that, all you need is term. You want, the lowest premium for the highest death benefit, invest the difference. How do you respond to those people?
Yes. Actually, here's an analogy that I'll use because I do work with a lot of real estate investors and I'm in the real estate world as well. So I'll turn around and I'll ask them the question, well, why do you buy a house instead of renting a house? Right? Well, I buy a house because I want to build up the equity. I want to build up my portfolio, accumulate more net worth, because I know real estate is a good asset. I know that it's going to incline as time goes on. I want that ownership, that control, right? It's the same thing with whole life. Whole life, you're buying the house versus term, you're renting the house. And it's just apples and oranges that folks are comparing. Because I'm never going to tell people, and sorry, I guess I want to get this thought out. I'm never going to tell people how to go out and invest your money, right? I'm just saying that everybody has a need to warehouse their money somewhere. And I want it to be in my bank rather than somebody else's bank.
Absolutely. I will say for the audience, that's how I got involved in infinite banking is originally through real estate, because I was basically using investment properties as my bank. So I, build up the equity. And my thought was that I was going to borrow from that equity in the future. And I just thought that these whole life policies were even better because I didn't need to go to another bank to get lending. Like I literally just log in, press a button, and I get my loan. So just that's kind of how I viewed it. And yeah, I couldn't agree more.
Yeah.
I guess when you're playing honest banker with yourself, how do you set that up logistically? Because you are, at the end of the day, you are taking a loan out from the insurance company, and that's, correct me if I'm wrong, it's from the general account. So it's just backed, but you are paying interest to the insurance company. So how do you go about playing honest banker with yourself?
So I structure it just as a normal bank would. Honestly, I go to, I believe it's a bankrate.com. They got their little loan calculators on there. So
Okay.
what I'll do is I'll go on there. I'll say, all right, Hannah, you just purchased yourself a $25,000 car. All right. And you want to charge yourself, because again, you're your own banker. You get to determine the interest you want to charge yourself. Do you have to charge yourself interest? No, but is it good principle to do so? Absolutely. So personally, I do 10% interest. I like it because it's aggressive. It's just an easy, even interest. And the more aggressive I am with it, the more dollars back in my pocket, right? So I'll go in there. I'll say, all right, Hannah, you took out 25,000, charging yourself 10% interest. You want to pay this money back over the course of 3 years, 5 years, whatever. And then I'll have Bankrate just tell me what my monthly payments have to be back to myself. So you could do something like that, or even just go in and do a calculation even of what you want to do. Sometimes I can be so disorganized that I will even just send chunks of money like every quarter back to myself, but I will always at the end of the day pay myself back.
Yeah, I was going to ask that. Yeah. Do you set up, auto pay monthly? I've heard some people just wait to the end of the year and pay all the interest then. So you're kind of like a mixed bag on whatever you're financing, I suppose.
Yes. Because if I'm financing, like, let's say a depreciating asset or like car, boat, maybe even a home remodel, right? I'm going to structure that loan as if I were to pay it to anybody else, any conventional bank. But if I have my investor glasses on, and maybe I say I use the cash inside the policy to go do a private lending deal or go buy a note or whatnot, and let's make believe that note is going to profit me 12%. Well, to be honest with you, I'm not going to pay back my policy loans right away, right? Because I don't care if the insurance company is going to charge me to use their money at a lower interest rate, because then I can turn around and go put that money to work, making more monies for me and producing more dollars, or what my mom likes to call our little green men, right? But then what will I do? Okay. So if I do have my investor glasses on and I use the policy money to go invest, well, each month when that borrower is paying me back the monthly payments, where does that money have to go? So I'll use some of it maybe to pay for some monthly expenses, grocery bill, phone bill, whatever. And then whatever is left over that I'm not using, store back into the policy. My policy is nothing more than just my glorified savings account, my warehouse of my wealth.
Awesome. Okay, speaking of having your investor glasses on, I noticed when I started putting money into these banking policies, the wheels start churning on how you could lend it out for a higher spread. How are you going about finding deals, or what avenues are you chasing to find people to lend to?
Yes, yes. A big one right now that I've been using. So, and actually, I believe he was a guest on your show, Mr. Chris Naugle. He has a platform called the Private Money Club. So if folks just go to privatemoneyclub.com, they'll find it. And it's literally like a match.com between borrowers and lenders. So I love it on there just because even prior to when that platform came out, I would go to Chris. I mean, Chris has been in the real estate world a whole lot longer than I have. So he has those relationships built up. So to be honest with you, it's just all the networking, right? Network with the people around. Go to your local real estate meetup groups even. Because honestly, there's people out there who need money, and there's folks who have money and just don't know what to do with the money, right? So if you can just match those people together, it's a win-win for everybody.
There you go. Very cool. Private Money Club. You heard it.
Yeah.
So I guess what's next for you in terms of policies and your career, I guess?
Oh yeah, man. Actually, I need to invite you on. Right before this call, I was on a call with my assistant, and we're putting together. So I am doing a home remodel right now, and so I'm putting together my new office, which is going to double up as my podcasting
Very
studio.
cool.
So I got some cool little works on that and kind of getting a cool background set up. But really traveling around. I'll be out there in California here next month teaching. Gonna go out on the road. That's another reason why I love the van is I'll travel out. I'll go meet clients around the states, go travel and go speak. And really just building, getting the message and the word out there.
And why don't you tell the listeners a little bit about the Money Multiplier as well?
Yeah. So the Money Multiplier, it's actually my father's agency. So his name is Brent Kesler. And to be honest with you, this was not our world whatsoever. So by trade, dad is a chiropractor. And actually that was my first job ever. When I was 14 years old, I was the front desk lady at one of his offices. And just we were consumers of this concept before dad just became so passionate that he began going out and teaching it to other folks. So what we do over here is we help folks understand the infinite banking concept, why it's important, get out of the government, the Fed, and the central banks, so understanding that why, and then if they want to do it, hey, how do I go and get a banking policy? How do I know that it's designed properly for this concept? And so we are practitioners through the Nelson Nash Institute. And just real quick, since we're on this topic, our Nelson Nash, he is really the gentleman that brought this concept to the public's eye. So we always have to give credit to Nelson. He was our mentor that really was out there teaching this stuff before us. So that's what we do. Help them obtain the policies, design it that way. And then, hey, now that they have the new tool in their tool belt, how do I start using this tool? Right. So we're here for that as well.
Awesome. We always like to look at both sides. What negatives, if any, would you say there are with infinite banking policies?
Yes. No, I love this topic too. I even have recorded episodes of the cons of infinite banking, right? Because there's no silver bullet out there. There's always pros and cons to everything. I would say a con to this concept is when folks try to compare it to other vehicles out there, right? The policy, this is not your investment. I agree with you, Dave Ramsey, when you tell me that a whole life policy is a terrible investment, because it's not my investment. This is just my glorified savings account where I store my dollars to then go buy my investments, my transactions in life, right? Another thing folks can see as a con is that, you know, in the early years of the policy, you got to capitalize. You're not going to get dollar for dollar out quite yet, right? In year one, if you put $100 into the policy, you're not going to have that same $100 within 30 days to be able to use. It'll be about 60% or so of that money. But I'm in this for the long term, right? I know that as the years go on, that uninterrupted compounding and that time value factor of the policy is going to get more and more mature, that I'm going to get to a point where I'm pulling out more from this policy than I've even contributed to it. I'm in it for the long term. And so one con that holds folks up is that short-term mentality. Because I'll be real with you, you've probably seen it. I'm so over the McDonald's drive-through mentality that we live in nowadays, you know?
For the audience that is interested in getting involved with infinite banking, well, you mentioned R. Nelson Nash's book, Becoming Your Own Banker, your father's book, Mapping Out the Millionaire Mystery. Are there any other books or resources that one could go to or read that you'd suggest?
Yes. So a book I could recommend is The And Asset by Caleb Williams. He's a colleague. He teaches infinite banking as well, but he puts it down really, really good in that book. For my auditory learners, the Money Multiplier podcast. I do a podcast weekly for y'all. And for my visual folks, even, we got the YouTube, the Money Multiplier YouTube. Go even look up Chris Naugle on YouTube. He posts a lot more content than what we do over here, real life case studies. But I would really start there. And then at the end of the day, y'all can always reach out to me, Hannah, spelled the same ways forwards and backwards, at themoneymultiplier.com. And you got my email right there.
Awesome. Thanks so much, Hannah. And it was a great discussion. I think the audience will have gotten a lot from this.
Good. Well, thank you, man. I'll invite you on here soon. Okay. It's good.
Awesome.